All right, good afternoon. Thanks for sticking this out for the afternoon. Hopefully, I'll make it worth your while with a couple of cool announcements that we've been working on for a while, specific to Abra in Europe. I've been asked to start off just kind of giving our perspective on what's going on in crypto and where we see things going over the next few months. And I'm happy, since this is the last talk, I believe, to take the conversation outside or even take a couple of questions if they'll let us. So I did this before. I actually got on a plane from Burning Man yesterday. And so I had no internet for a week, and I think this is about 10% too low right now because we went a little higher. But basically, we've got a $200 billion plus asset class that didn't exist several years ago. We've got a whole bunch of coins now that are worth, at least from a trading perspective, minus breakage, over $1 billion. And obviously the volatility is real, but a lot of people, like myself, believe that the cryptocurrency model, based upon decentralized processing, is here to stay. So let me give you my perspective on where Abra sees things going and the state of things, right? This morning, we spent a lot of time on CNBC talking in prep about China. You're all hearing about the so-called crackdowns. Look, I mean, the average person in China believes that there's an ongoing crackdown on everything, except for the ability for you to walk around with a device holding ones and zeros. So the basic idea of holding a cryptocurrency on a smartphone, it's simply something that you can't outlaw. Now, they may outlaw the rails that allow you to get it on the phone in the first place, but people are smart, right? They're figuring this out. Look at the local Bitcoin chart for China, right, which is operating via VPN and Tor and other privacy methods, and tell me that there's no transaction volume for Bitcoin going on in China. As a matter of fact, if you look at the local Bitcoin charts for the last 2 years, you can more or less tell the exact day when they shut off the exchanges. It's astounding, okay? The other thing that we talk about a lot in my world is, when is institutional money going to start to come into the cryptocurrency world? So in the US, our Securities and Exchange Commission is sitting on a whole bunch of exchange-traded fund applications. I don't know if ETF is a term used here, but it basically allows you to buy exposure to Bitcoin through something that looks like a mutual fund. All of the applications that have been processed so far have been denied. There are 10 plus applications pending. The demand for this in the US is enormous. And so eventually the government is going to have no choice but to acquiesce to the fact that this is something that people want. And my bet is that this will happen within 12 months. The scalability issues in the kind of pure play cryptocurrency world, I'm not talking about the tokenization of stuff, but the real cryptocurrency world is improving at an enormous rate. Lightning Network is real and is working. I'm really excited about some of the next generation stuff happening in the Ethereum world. And we're looking hard at Abra at both collectibles as well as native ERC20 support, which really turns the app into more of not only an exchange function, but a digital asset management system, which is where we actually think all this is going. So the idea of becoming your own bank and digital asset management actually converge to become the same thing. That's another talk. But that gives you a little bit of a preview, if you watch this 6 months from now, where we think this is going. And of course, to top this off with kind of the new token world, which you spent most of the day listening to, the EOS launch or raise was simply astounding. So I want to talk a little bit about the user experience in cryptocurrency investing. This is, I'm not picking on anyone. They're more or less all the same. This is one that I chose at random. Here's a couple of other apps that we chose at random. We run tests where we put this stuff in front of average consumers who want to invest in cryptocurrency and watch what happens, all right? And it's way worse than the blank stare a lot of you are giving me right now, okay? Now, we started Abra to put a human interface on the cryptocurrency world. Now, ultimately, we want to make cryptocurrencies disappear into the background, the same way TCP/IP is in the background when you start up Netflix. And we're on the path to getting there. But the app we chose to do first is cryptocurrency investing. Liquidity partners that we've lined up for this, and it's just going to get better. So if you're interested in simply getting into this via your bank account, we now have a great solution for Europe. Okay, so that's announcement number one. Here are the countries that this supports out of the gate. Obviously the big ones. I'm really excited about the fact that there's a whole bunch of small countries that are pretty much shut out of buying crypto today that we've been able to squeeze into this launch. Should make localization a fun process when we start that in a couple of weeks. Okay, so I'm going to go back and just show you how the exchange function works. I press the exchange button in the lower right. I simply choose which coin I want to start with. You can go from fiat to crypto, crypto to crypto, crypto back to fiat. You can even go fiat to fiat. We have people who use Abra as a global money transfer mechanism with 0 bank rails in the middle, right? So you can put Bitcoin into the app, send that to somebody in another country who receives our synthetic dollar, and because there's no custody in the middle or at the edge, we don't have to know who the consumer is. Now, if they take it out via the bank account, via the function I just showed you, I have to know who you are because the exchange is processing the withdrawal. But in between, I don't even need to know who you are. Again, this is the way crypto was meant to work, right? But the exchanges are processing order books, right, in the E-Trade world, not in the crypto world. And we want to bring everybody into the real crypto world, but in a way that hides the complexity. Okay, so lastly, I want to show you the list of coins that we support as of a few minutes ago. About 10 minutes ago, we turned on 3 new tokens. So we added Cardano, BAT, and Tron, which finally met our liquidity requirements. You may be wondering why this list of 28 coins or tokens, and that has to do with how our system works. Don't come to me and ask me to list your coin. It doesn't work that way. We track 1,000 of them. When it meets our liquidity requirements, it more or less gets added automatically. So there's no fees. It's to pay us to list your coin. It doesn't work that way. And we get great volume across all of the coins. It's fantastic to see the following for very strong reasons that people have for what they're investing in the Abra system. When we added Digibyte, for example, a few weeks ago, it's a huge spike, and we're one of the largest liquidity providers into the Digibyte system, which is a fork of Bitcoin that changes the mining process. It's super interesting. And of course, Monero and Zcash for the privacy crazies among us as well. So let me talk a little for a second how this works. So I mentioned that when you're holding pounds or dollars or euros in the Abra app, you're not actually holding that money in a bank. Now, you've heard this idea of a stable coin, but most of the stable coins that are popular today, like Tether, are actually backed dollar for dollar with money in a bank account. Now, from the consumer's perspective, that's actually not true with Abra. So what's going on? Abra uses multi-sig contracts in Bitcoin to effectively create something that looks similar to a UK-style CFD, but with zero leverage, with Abra acting as the long counterparty to the Bitcoin contract, right? But the consumer holding the contingent of Bitcoin on their own phone, right? And if the price of Bitcoin goes up relative to the pound, for example, they lose Bitcoin. And if the price of Bitcoin goes down, they get more Bitcoin. And then Abra runs a very sophisticated market-making operation which hedges away our counterparty risk on those contracts. So to be more clear, when the price of Bitcoin and Ether plummeted in the first half of this year, we didn't lose a penny on any of those contracts. As a matter of fact, if we hadn't hedged, I wouldn't be standing here right now because we'd be out of business. And so we've done this now. I think we just crossed for the first few months the $500 million mark in hedging contracts, and I believe we're now one of the largest borrowers of cryptocurrencies in the world. And we're getting better and better at it. So the idea of this contract, it basically simulates this ETF, or in your world, something like a CFD, but with no centralized clearing, because everything is Bitcoin-based, or in some cases we're using Litecoin as well if we can borrow it for cheaper, but the consumer can't tell the difference, right, because it's all happening in the background. What's really cool about this is that we needed this solution to be able to make Abra legal everywhere so that we could hold fiat without having e-money licenses and banking licenses and stuff I didn't want to do, because eventually I want to use this for remittances and payments and money transfer, which is why the company is called Abra, A-B-R-A, a better remittance app. We simply need to build a liquidity system in the first step to get there, and that's what this does. That's why I said eventually I want the crypto in the background, because if you use this for payments using these smart contracts, you won't even know that you're using Bitcoin. But what's really cool about that is I can actually now, with this model, create synthetic anything. Not just fiat currencies or synthetic other cryptocurrencies, but I can create synthetic stocks and bonds and commodities, even collectibles. I can create synthetic American baseball cards as long as there's a liquid market for baseball cards to hedge away my counterparty risk. And I would actually go out so far to say I wouldn't be surprised if you see us launch other asset classes that would be interesting to these users inside the same app. So you can guess what those might be. We can also mash up existing asset classes into a new asset class. Or I can take 100 cryptocurrencies that are already hedgeable in my app and create one new currency out of it, and you have no idea how the contract is settling in the background. It simply is. And that can give you a hint at some stuff that we're working on, which I'm not supposed to be talking about. So that's Abra. As of today, 28 cryptocurrencies, 50 fiat currencies. We're also announcing today native Bitcoin Cash for deposits and withdrawals. So now you can deposit Bitcoin, Litecoin, Bitcoin Cash, and withdraw those natively in the app. And we're adding more native support for the other currencies, because there are people who want to use them not just for investing, but obviously for buying and spending as well. And we're adding them on a rolling basis. But we're starting with those 3 now. So that's the third of the announcements that we're making today. We've just passed the I think we're in the first few months signed up hundreds of thousands of users in 70 plus countries, but we just passed the $500 million mark in transactions processed this week with zero marketing pretty much, except for me coming here and talking to folks like you. And so I'm really excited about the user response. I believe it's in terms of just retail non-trading kind of apps, it's the #1 app now in the US, and I hope with this announcement that we can spread the same word here in Europe. So thanks a lot. And I'll be walking around if you guys, I don't know if we have time for questions, but we can certainly bring it outside if you guys are interested. I'll stick around for a little bit until my jet lag kills me. But thanks for listening.
All right. Thank you, Bill.